أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد. Say, He is Allah, who is one. Allah, the eternal refuge. He neither begets nor is born, nor is there any equivalent to him. صدق الله العظيم. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Alhamdulillah. Salatu wassalamu ala Rasulin Nabil Kareem wa ala alihi ashabihi ajma'in. Amma ba'd. Taif Digital Institute for Islamic Finance welcomes everyone for joining us. Today's webinar will be about becoming a certified Islamic finance general risk assessment and mitigation specialist, where our dear speaker, Dr. Tawfiq, will be joining me. Before inviting Dr. Tawfiq, I would like to quickly introduce TAIF to all of you. TAIF Digital Institute is created to lead the way through a new age approach to the training and awareness of Islamic finance. TAIF is providing an end-to-end digital learning solution to Islamic banks and Islamic finance institutions by combining the knowledge of Islamic finance and technology and presenting it to the masses of the Ummah. TAIF offers to make Islamic banking and finance to the world as a commercially viable solution by digitizing it and making it available to all. I would like to invite Dr. Tawfiq Azrak. Dr. Tawfiq is an accounting, auditing, Islamic finance expert with over 5 years of experience, an outstanding communication, classroom management, and presentation skills from different universities. Dr. Azrak has worked as an assistant professor at Social Sciences University of Ankara in Turkey. Earlier in his career, he has worked in International Sharia Research Academy for Islamic Finance, ISRA, and practical training in Sharia department is ASEAN Finance Bank. He has published several projects and research paper, and a number of students have gone under him doing PhD and masters. So without further ado, I would like to call Dr. Tawfiq Azrak to take the mic and continue the session.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam.
Thank you very much, Brother Ihsan, for your introduction. Let me first share my screen, share these slides. Okay. Tamam. So as your introduction, Brother Ihsan, we are talking about risk management today. As an introduction about risk management for Islamic financial institutions, this is very important topic for all of us, because as individual or as companies or as financial institutions, every one of us face different types of risks. As individuals, starting from morning until when you sleep at night, you have different types of risk, whether it's big or low, small or big issues. In same for institutions or companies, they have every day in their transactions different types of risks. So inshallah, today is our main aim to introduce basic introduction about this important topic in our daily lives, especially for the corporate side. Now, my general outline will be as followed. First, we will start introduction, then we will discuss the concept of risk from Islamic perspective, risk classification, types of risk exposure, and then after we will define certain types of risks, we will talk about risk management. What do we mean by this risk management? And what is the main aims or goals for risk management? And then the process, what is the process 1, 2, 3 in order to manage your risks? Of course, in risk management, there are qualitative and quantitative analysis of risks. Then we would conclude with some risk management in Islamic finance. Basically, first of all, we can define risks as uncertain future events which could influence the achievements of the financial institutions. So whether we are talking about banking institutions, insurance, takaful, or capital market institutions, whenever you have some objectives and you didn't meet your objective, so there will be risks. Now, there are lots of risk definition we found on literature. I just bring some of them as follow. The first one, we can say it is the uncertainty about financial loss from an exposure, or we can say it's the relative variation of actual from expected outcome, which means that if you were expecting to get profit at the end of the year, 1,000, then you got profit 500, like let's say, then the difference between the expected and the actual, this is the risk which happened to your institution. Also, when we have the existence of uncertainty about future outcomes, there will be raising the risk issue. Now, these risks which happen to any one of us or to any institutions or to any banks, it will happen due or from different events. For example, if the borrower, he default to repay his debt on time, or if we have fluctuations in the foreign exchange rates, or if there is any fraud or incompleted security documentations happen from one time to another, or in Islamic financial institutions, if there is any breach of Sharia compliant rules and structure, here we have also risks of non-Sharia compliance. Now, for risk from Islamic perspective, when it comes to our mind, this word risks, always there are 3 types of risks we can think about it from Islamic perspective. The first one is, we call it as essential risk. The essential risk, which means that every business or transaction, it should have these risks. It is necessary to have this kind of risk in order to justify your profits. And here we have 2 legal maxims, which is very important for each one of us to understand in terms of Islamic law. The first one, it's called al-ghurmu bil-ghunum, which means that always when you have to always when you are going to get benefit or profit from anything, you have to bear the risks of it. For example, in case of the Murabaha in Islamic Bank, they cannot sell the assets without purchasing these assets. So when they will purchase these assets, they will bear the risks. So they will have this risk of default, maybe they have risk of market risk, etc. The second one is called al-kharaju bid-daman, which means that always when you have the right to profit from something, it will come with liabilities. So you have to bear the liability for these assets before you deserve the profit out of it. So those types of risks, it's called essential risks. And it's very important for any transaction to have those risks. Now, on the other hand, we have something called prohibited risks. The prohibited risk, it comes usually in form of excessive gharar. Gharar, it means uncertainty or risk or hazard. Now, Every transaction in Islamic financial contract should eliminate the concept of gharar, which means that the subject matter should be identified, the price should be known, the contracting parties should be known and mature, okay? There will be offer and acceptance from both parties in order to have right Sharia contract. So in order for us to have a fully and right Sharia compliant contract, the element of gharar, which comes is excessive gharar, we can say, because we have different types of gharar. We have minor gharar and we have excessive gharar. So the prohibited risk is came in form of excessive gharar. So this one, if we found it in contract, it will make the contract unjustified and invalid. So we have to remove it. The third one, the permissible risks. And this is the normal risk which you can find in any businesses. Credit risk, operational risk, market risk, liquidity. And of course, each financial institution have the chance either to accept it, or they manage it, or they avoid it. There are many ways to manage these risks. But of course, this risk is always there in any contracts or in any transaction. So those three important classifications or types of risks. Now, with regarding to the risk classification, actually in literature, there are many classification of risks. I only discuss three of them. The first one, we can say we have systematic and we have non-systematic risks. What do you mean by systematic risk? Systematic risk, it will happen to the whole country or to the whole economy. Usually, it will affect the whole industry without any intervention from the company itself. Like it's not something from inside the company. It's something happen beyond the control of the company. So it will affect the whole markets. While on the other hand, the non-systematic risks, here, it will affect only certain types of products or certain commodities, right? So this is, sometimes it may come from the company or outside sources also. Like for example, in the current time, as we live in 2020, we know that this COVID-19 pandemic happened. So this COVID-19, when it's happened, it's considered as systematic risks because it's affect the whole markets and the whole industry, whether airplanes, whether hotels, whether universities, it doesn't affect. I mean, it doesn't matter because it's affect all one of us. So this is the first classification of risk we can set. Of course, we can control the non-systematic risk, but usually the systematic risk, we cannot control it because it's our beyond our hands, okay? The second classifications, here we have the financial risks and non-financial risks. The financial risk, this is the ability to manage the company financial leverage and debt and cash flow. So it's related more about the market risk or credit risk or interest rate risk. It's related to finance department more or less. Well, on the other hand, the non-financial risk is more about the legal risk or regulatory risk or operational risks. So this is also one classification of those risks. The third one, it's for, as we know, for Islamic financial institutions, they have separated or unique risks and they have common risks with the conventional banks. Therefore, the scholar, they define that we have general risk. This general risk, it's combination or common between the conventional and Islamic banks. On the other hand, we have in Islamic banks or in Islamic financial institutions, specific risks is only unique for our nature of our businesses, which is Sharia compliant businesses. For example, in Islamic banks or in conventional banks, we have operational risks, we have liquidity risk, we have market risk. But the unique risk for Islamic financial institutions, like Sharia and compliance risk, or rate of return risks, right? Or equity investment risk. So those are especially for the case of Islamic financial institution, either it was Islamic bank or it was Islamic capital market or takaful companies, etc. So those the three classifications of risks. We can talk about it. Now, I will talk about, as I mentioned in the beginning, there are many types of risks. Briefly, I will explain about each type of risks and what does it mean in the industry. Now, for example, the most important one we can say is the credit risk, because always they are talking about the ability for the lender. How I can will give you example for credit risk. It will be very easy to understand, inshallah. For example, you are giving your friend a loan and he promised you that after 1 month, he will repay his debt on him. So the credit risk after 1 month, it's reached and your friend, he don't have the money to repay his debt. So it's exposed to loss. You as person, you exposed to loss from a borrower, or we can say counterparty, the person who you deal with, who fail to honor their debt obligation as what they have agreed. So he don't have maybe cash after 1 month, so he fail or he ask for more time to repay his debt. This is one way of credit risk. For instance, of course, in Islamic financial institutions, we have different types of contracts. Like for example, we have in Murabaha, when the Islamic financial institution, they will give financing to someone, and this customer, he will repay on time certain installments. So if he default or if he don't have much liquidity to repay his debt, then this is, we call it as credit risks. And of course, there are many ways to manage this credit risk in Islamic financial institutions, right? For example, they can ask for pledge, or we call it as rahan assets, or they can ask for third-party guarantee. So there are many types of managing this credit risk. Now, the second one, we have the market risk. Also, the market risk is very important because it's related to the fluctuation of the market prices. Like for example, if you have assets, and this assets prices has fluctuated either down or up. So any fluctuation in the price, it will affect our values in the market risk, okay? So always, this risk is related to future volatility of market value of specific assets. For this risk, usually in Islamic financial institutions, they differentiate between market macro risk and market micro risks. The macro risk here, we mean that the overall movement of prices and in economy in general. But when we are talking about micro market, which is unsystematic risk, here we are talking about the fluctuation of the prices of specific assets or specific installments only. So always when we have the market risk, either we have it at macro or micro level. And this risk, of course, is very important for each Islamic financial institution. And there are also many ways to manage this risk by hedging, etc. Now, the third one, it is related to liquidity risk. Liquidity risk, it's more or less related to the cash flow of our financial institutions. Like, for example, we have amount due after 1 year. So we have to prepare ourselves from now how we are going to meet this debt or this payment, which we have to pay later. So any shortage of the liquidity and we didn't meet our obligation, then we have expected or unexpected liquidity risks. So always when we are talking about liquidity risks, it's related to cash outflow. Okay. Also, this risk is very crucial for Islamic financial institutions because, as we know, the issue of bay'ul dain is not permitted by Sharia, and is the secondary hand, the market of secondary market is not always available. So always in the Islamic financial institutions, they have this risk, and one aspect of this liquidity risk is the assets liability management. This is, for example, we have as Islamic financial institutions investors. Those investors will invest in short term, okay? Let's say short term they want, and they are asking for their money after 1 month. But for us as financial institution, we are investing in the long run for 2 years, 3 years. So always we are required to manage between our liabilities and our assets. Any mismatch between assets and liability will lead to the liquidity risk. Okay. Beside that, we have the operational risk. Operational risks, also this is very important because it's related to our daily transactions. Day by day, when we have the daily transaction, this is the operational risk. And the Basel Committee and industry, they say this risk happened because of 3 things: inadequate or failure of internal processes, people, and system. So in other words, we can say that this risk associated with failure in operations that is caused by people, process, or technology. People, which means our staff, our management, our board of directors, or our Sharia guys. The processes, how our Islamic financial institution work, what is the process in order to for example, to launch a new product. Technology, what is the IT or technology which you are using in our bank or in our Islamic financial institutions, so on and so forth. Beside that, also we can consider the legal risk is also part of operational risk. Also because it's related to the regulations or legislation. And as you know, those regulations is different from one country to another. Some countries, they have dual banking systems. Some countries, they have only Islamic banking systems, right? So it's different from country to another, this regulations issue. But it's considered part of the operational risk. Now, the most important risk for Islamic financial institutions, as you know, is the Sharia non-compliance risks. This risk is unique for Islamic financial institutions. We cannot find it in conventional bank. Here, what do we mean by that? If the bank, for example, he breach any Sharia requirements, then he will expose himself to Sharia non-compliance risks. Of course, this risk can happen starting from the product development until we launch our products in the markets. So always when we have lack of internal research in understanding the appropriate Sharia concepts and misrepresentation of the product at the issuance or marketing stage of this product, it will lead to Sharia non-compliance risks. And there are many types of Sharia non-compliance risks in each Islamic financial institutions. For example, when the Islamic bank, they will sell something before they own it physically, tamam? Or not physically, they own it. They cannot sell something before they own it. لا تبيع ما ليس عندك, tamam? The hadith of the Prophet Muhammad sallallahu alaihi wasallam. Or if they are entering into transactions which have not very clear businesses, whether it's halal or haram, it may raise the Sharia non-compliance risks. Of course, those Sharia non-compliance risks, we can manage it by Sharia review, Sharia auditing, and there are lots of details regarding this risk. So those are some of the risks which any Islamic financial institutions may expose to. Of course, those risks are integrated between each other. I mean, we cannot separate, we say, Sharia risk is different from the liquidity, different from credit, because at the end of the day, if happens something to our credit risk, it will affect the liquidity risk. So always there are interconnection between all those types of risks. Okay. Now I will move to something else, which is about the risk management. So after we discuss that, those types of risk is important, and every financial institution are exposed to those risks. So of course, we will not say, okay, we will accept those risks and we will not do anything. No, we have to do something called risk management. So basically, because every businesses and organization face unexpected risks, so this risk management strategy or whatever, it will allow us to attempt to prepare plan, or some what we call it as we have plan A, plan B for any unexpected risk which can happen in the future. So we can identify the risk management as the processes of identifying, assessing, and controlling threats to an organization capital and earnings. So those threats or risks could stem from a wide variety of sources, as we mentioned, including financial risks, including regulatory risk, strategic management errors, accidents, maybe one staff error, etc., or natural disaster. Also, the Oxford Dictionary for Business and Management, they define the risk management as process that aim to help organization to understand, evaluate, and take action on all their risks. It's very important also to know that risk management, it will not be responsibility of one department in the bank or in the institution. No, it will be integrated between different departments, and each staff in the institution should be responsible for identifying what is his risk management in his section or in his department or in his job satisfactions, I mean. So here, the issue that always in every organization, it need to arrange the risks from different levels, from the management until the normal staff, until the board of directors. So each one of those guys, he will be responsible for certain parts of managing the risk from his rules. Okay, so risk management need to take into consideration the interaction of these levels and reflect the processes that permit these levels to communicate and learn from each other. Of course, when we are managing our risk, we are reducing the economic harm of our company or our organization. This economic harm can affect or can raise in three ways. First of all, any increase in the future expenditure or any reduction in future income or any reduction also in value of existing wealth, which our company or our bank have. Okay, now I will move to the risk management goals. Actually, same what we discuss among there are of course many risk management goals, but we just select 6 or 7 goals which we will discuss. So the first one is about maintaining the trust and confidence of the financial institutions in the shareholder point of view. because it's very important for any Islamic financial institutions to keep the reputation and the trust between or among the shareholders, because this is the very important element. And if we didn't keep this trust or this reputation, our Islamic financial institution will lose a lot from this. Also, we have to develop a common understanding of risk across multiple function and business units, which means that each Islamic financial institution, they have to teach and train their staff how to manage those risks. As I told you, not only the risk management department, he will be responsible, but all the staff of our organization. Also, achieve a better understanding for competitive advantage. In order to be advanced on our competitive, we have to manage our risks in perfect way or in effective way. Also, we will build safeguard against earnings related surprises. We don't know what is the future will hold for us, right? So in this case, we have to build and manage our risk perfectly in order we can manage any unexpected risk it will happen in the future. In addition, we can say that allocate capital more efficiently, which means that we will save our capital funds from wasting, because by risk management, we will make sure that every investment we are 100% that, okay, this is very good investment for our bank. This is very good financing for our bank. This is good opportunity. So we will study all the choices, of course, and then we can invest in more effective way by applying these risk management strategies. Now, for risk management processes, of course, there are 6 steps for any risk management company or firm they will implement by. First one, setting up risk management policies, which means that here, when we first establish this bank or this company and we are now thinking about risk management policy, we will say that, okay, we will accept higher risk or no, we only accepting lower risk. It depends on our strategy, our company, where we are targeting, which product we are offering, etc. of course. Then after we will set our risk management policy, we will identify the risk. We will try to find that, okay, if we give financing to this guy, we have here, for example, credit risk. Okay, if we purchase these products from this market, we have market risk. So we will identify every risk which can happen to us. Number 3, after we will identify all those risks, we will evaluate them. What do we mean by evaluation? We will say this will affect our company a lot. This is okay, we can manage this risk because it will not affect us a lot. Evaluation, we will say this is high risk, this is medium, this is low risk, etc. After we will evaluate each risk we have, then we will put strategy how to manage those risks. Of course, for each Islamic financial institution, there are a different way to manage the risks, starting from risk transfer to risk reduction or to risk sharing, etc. So it depends on the risk itself. Number 5, the implementation of risk management plan. Okay, after we put this plan, then we will come to the effect. We will plan this implementation now. And lastly, in order to make sure that our plan is working properly and in correct way, we have to review time by time, and we have to make, like, for example, each month, check whether our risk management plan is working as what we supposed to do or not. So always we have to monitor and to review our risk management plan. So those steps is very important for each financial institution. And of course, those steps is continuous, which means after we will review and monitor, we may again setting the policies or rethink about those policies, whether it's effective or not effective. So those process or those steps is always continuous. We will check again, we will evaluate, we will implement, we will review, and then this step, it will go as long as the company working continues. Okay, now this is just simple about what is the difference between quantitative and qualitative risk management analysis. Of course, we are doing our qualitative risk analysis in order to prioritize our risks. Like as we mentioned before, when we are evaluating our risks, we will use the qualitative risk analysis. We will say, what is the probability and what is the impact of this risk to be happen in our company or in our bank, okay? So for example, we might evaluate the risk probability and impact on a scale of 1 to 5. Let's say 1 have minimum risk, 5 have high risk. So if the probability for some risk was ranked as 4 and the impact was ranked at 3, then we will multiply the probability times the impact will give us a score of 12. So every time when we will identify the risk and we will make risk analysis on qualitative basis for all the risk, then we can say that, okay, this risk have higher, for example, effect of our company. This effect will have lower effect on our company, etc. But in against or in opposite side, we have the quantitative risk analysis. The quantitative risk analysis, not all the companies they do, and if they do, it's require a calculation, and it's came in the matter of money or in the matter of, for example, we can say that this risk, which is like, for example, we are giving financing to one client, this risk, credit risk, have 20% probability of occurring. And if this risk occur, then there will be one, let's say, we give financing of 10,000. This 10,000 impact. So using the expected monetary value method, so we will multiply this 10,000 by 20%, we will have 2,000, risk exposure. So here we know in exact how this much would affect our company. Of course, there are many types of risk analysis by using quantitative method. We have, for example, Monte Carlo simulation, or we have sensitivity analysis and others. I only put those graph or table in order to mention what are those differences between qualitative and quantitative. So for example, the first one is easy to use. Most of the companies or banks, they are using this qualitative risk analysis, but not all of them, they are using the quantitative risk because it's require lots of effort and lots of time. Okay, here I would always perform by qualitative. The quantitative is optional. Also, the qualitative risk analysis, it doesn't require any calculation. It's easy to understand, easy to implement in your company. You are only, you will multiply, for example, the probability, multiply by the consequences, then you can get it. But for the quantitative, sometimes it's require a specialized program, statistical program, and it have a complex calculation, okay? Also, the last one, when we usually we use it to prioritize our risk, the qualitative risk analysis. But on the other hand, the quantitative risk analysis, it will give us more details in terms of money, as I showed you in the example. Sure. So as I mentioned in risk assessment, lots of financial institutions, they are using risk matrix, and this is very simple way. They are only mentioning the likelihood or consequences of this risk, and they will categorize it based on this table in front of you. So if, for example, if we say that this is low risk, then they will accept it. If they have medium risk, they have specific responsibility or treatment. But on the other hand, if this risk defined as a very extreme, then the management will look to this risk each month. So now when we move to the risk management Islamic financial institution, so as Islamic finance institution, do we say that, okay, we will accept all those kinds of risk and we will not do anything? No, this is not the case, because it was mentioned in Al-Quran, Bismillah ar-Rahman ar-Rahim, oh my son, don't enter from one gate, but enter from different gates. In Surah Yusuf, when Sayyidina Yaqub, he ordered from his sons to enter from different gates in order to justify the risks between them. Also, it was narrated from the hadith of the Prophet Muhammad ﷺ, when he see one man that he keep his camel without tying. So he asked him, why you didn't tie down your camel? He say, because I trust in Allah. Then the Prophet replied to him, please tie your camel first and then you trust in Allah. I'aqil wa tawakkal. Okay. So this is in Islamic financial institution risk. Usually the board and the senior management will manage all those kinds of risk, whether it's liquidity, which we discussed previously, or market or equity investment risk, while the Sharia board or the Sharia advisory council or the Sharia committee, they will manage the Sharia non-compliance risk. Of course, for Islamic financial institutions, as we know, IFSB, Islamic Financial Service Board, has developed 15 risk management principles in order to give guidelines for Islamic financial institutions. So those principles, they provide set of guidelines of best practices of establishing and implementing effective risk management in financial institutions, which according to the Sharia rules and principles. So there were 15 distinguished principles of risk management. Okay. So in general, we have one general principle. We have 4 principles dealing with credit risk. We have 3 principles dealing with equity and investment risk. We have 2 principles talking about rate of return, 1 about market risk, 2 about operational risk, and 2 about liquidity risk. Yeah, thank you very much for your listening, for your attendance.
Jazakallah, Doctor. So we will be opening the mics, and then we have some questions as well. So let's start with the mic first, because we want it to be very interactive. Brother Khalid, you have to, if you are hearing us, Brother Khalid.
Assalamu alaikum wa rahmatullah. Assalamu alaikum wa rahmatullah.
Wa alaikum salam wa rahmatullah.
First of all, I am really thankful to Taif for giving me an opportunity for attending this webinar. The overall presentation by Brother Tawfiq was almost very informative. I just want to add something that you have your last slide, not last slide, actually this was the second last slide, where you had mentioned the verse of Surah Yusuf about the brothers of Yusuf when they went to Egypt for trade, not for trade, but this was the reason when famine came. So I just want to add a hadith of Muslim, Sahih Muslim, regarding risk management. When Prophet Sallallahu Alaihi Wasallam once they saw the companions were doing the practice of grafting, and Prophet Sallallahu Alaihi Wasallam just he just inquired about that, what they are doing actually. So the companions said that we are doing the practice of practicing grafting, and it helps us to grow the production. So companions think that Prophet Sallallahu didn't like our practice, so they neglected it on the future basis. And next year, Prophet Sallallahu Alaihi Wasallam asked about the production. So companions acknowledged that you had uh, stopped us about related to the practice of grafting. So Prophet Sallallahu Alaihi Wasallam said that Antum a'lamu bi amri dunyakum, that you know better than me about your worldly affairs. So I just was wanting to add this hadith there. This was also related to the risk management. Thank you,
Thank you
Jazak.
very much. Yeah, thank you very much. It's yes, it's related to risk management, and we can add it. Thank you.
Ask
Other questions you have?
Brother Majidu Salim to ask the question. You can unmute yourself, Brother Majid.
Assalamu alaikum wa rahmatullahi wa barakatuh. Assalamu alaikum.
Alaikum salam. Alaikum salam.
So I have two questions, but before that, I would like to thank the moderator for hosting this program. It's really very helpful and educative and informative. Jazakumullahu khairan.
Thank you.
Now, I have two questions. One is when we are making an informed decision about risk management technique, which steps should we follow?
Sorry, but I didn't get the question. Which step?
Okay, like when we are making an informed decision about risk management technique or on the kind of risk management technique to use, which steps should we follow?
Which step we follow? Okay.
Yes. Then also, which techniques should we use to manage these risks?
Yes. Okay.
Yes, sir. Thank you.
Thank you. Brother, just to answer your question, actually, which steps should we follow? As I told you, for risk management processes, there are certain steps. First, we have to identify this risk. Then we have to manage the risk. But for the question, which techniques, it depends on the risk. We cannot say that one technique, it will manage all our risk because it's different from one contract to another. Of course, there are 4 techniques usually in, they are using in Islamic financial institution. Like we can make risk avoidance, we didn't accept the risk at all, or we can have risk reduction, we can reduce, or we can make risk sharing between the participants and the banks. So it differs from one contract to another. It depends on the risk itself also. So there is no one technique we can apply.
Okay.
Yes.
Okay. Thank you.
You are welcome. Okay. Is there any other questions also?
We have Brother Ibrahim. Brother Ibrahim is going to ask a question. Brother Ibrahim, you can unmute yourself. We can hear you, Brother Ibrahim. Can you say something? All right, Doctor. I have a question. I have questions here lining up in Q&A. All right. So the question here I have is from Indonesia. All right. And the person is asking how to identify, measure, and manage risk of profit sharing basis contract in Islamic finance institution. Is asking
how to manage and how to manage the risks.
How to identify or measure, and basically these are 3 questions. It's a very wide question the person is asking. Identify, measure, and manage risk of risk for profit sharing based contract Islamic finance institutions.
Okay. If we are talking about the Islamic financial institutions or the profit loss sharing contract, or we have maybe the musharaka. So it depends on the risk itself and how we will manage this type of risks. For example, if we have in musharaka liquidity risk, we have to make, for example, capital reservation, or if we have, for example, equity risk, or if we have credit risk, we have to right to sell equity, or we have to manage the risks between ourselves as institution and our partner. Or if we have operational risk, maybe we will go for takaful participation. We will ask for takaful company to manage this kind of risk. So it depends on the type of risk. For each type of risk, we have different category or different risk mitigation method we can use. What is the other question? I didn't get it.
All right. The other question we have from Muhammad Bilal Khan. All right. Muhammad Bilal Khan is asking, what are the measures that Islamic finance institutions can adopt to reduce the risk related to investment, as Islamic finance institutions do not have such diverse investment portfolios as conventional?
Risk related to investment risk.
Yes. Related to investment in Islamic finance. He says, how do you measure Islamic finance institutions?
Actually, this is depend on the institution risk priority. If they want, they can invest in high risk investment. But if they don't want, if they want, like for example, as we know, high risk will be associated with high profit. So it depends on the strategy of each Islamic financial institution. If they want only low risk, tamam, they will go for invest for low risk investment strategies. But for the investment, in order to reduce it, it depends on the investment where they invested. Like for example, in real estate, there are market risk, but they have then the question how they can manage this market risks. Here we have either to accept it as it is or to find third party who can assist in this regard.
I see. All right. Another question from Nadia is, Walaikum Assalam, Nadia. It says, are director, board, and manager also responsible for compliance with Sharia risk management? What difference with Sharia? What different with Sharia board in this matter?
Yes, actually, the first and utmost responsibility, of course, it will be for the Sharia board, because they will be the responsible. But the board of director and the manager, they have to support their decision. Like for example, if the Sharia committee, they take one decision, the director or the manager, they cannot go against their will, or they cannot only refuse or to reject applicable those fatwa or those decision. So they can assist them by implementing and encouraging them to implement the right way of Sharia, how it should be in banking institutions.
I see. But okay, one more question is, what is the significance of reputation risk for Islamic banks? Could you give any example?
The reputational risk actually is very important risk because it will affect the whole risk of the banking institution. One example, like as I mentioned, anything happen in Sharia, non-Sharia compliant matter, it will affect the reputation of the Islamic bank. Like for example, if the Islamic bank engage in non-halal activities or in purchasing commodities which have not 100% halal sources. So in this case, if the people in the street, they know that this Islamic bank engage in this transaction, then it will increase the reputational risk and it will affect the reputation of this Islamic bank. So this is a very important risk for Islamic bank to manage.
All right.
Yes.
Actually, there is one brother, Abu Jida, he raised his hand. I think he was waiting for you. But I'm not sure whether he's available right now. I don't see his hand.
Oh, okay.
Brother Jida, if you can hear us, you can maybe raise your hand again if you want to talk to Doctor, inshallah. Okay. That's fine, Hassan. You can proceed to the next question. If he raise hand, I'll let you.
Yes, I see here also one question. he said many Sharia, especially Sharia non-compliant, non-convertible risk arise when signing the contract. How Islamic bank can avoid by the Sharia board or by the Sharia departments, because those Sharia departments, they are responsible on daily check of those transactions or on those contracts. So if they see any element or any condition that is not, again, I mean, not alignment with the Sharia principle, then they can remove it, or they can ask this department to correct it before they agree. Because of course, as we know, every Islamic financial product, before it goes to the market, it should have the agreement or approval of the Sharia committee. So how the Sharia committee, they will approve it if have any element of non-Sharia compliant, right? So this is the question of brother Mahmoud. Mamdou, tamam. I think those were the questions in Q&A. Do you have any other questions, brother Ahsan?
You're asking about the questions, what are the risks in Islamic fintech companies?
I don't have this experience yet. We can answer you later.
All right, all right. So
there's another one question asked on the chat window. Please also explain risk appetite and risk tolerance and their differences. I think you covered it, doctor.
Yes, I covered it in the slides. Maybe if you
Okay.
can refer to the slides.
Inshallah. And then the other question is, displaced commercial risk is also very important for IFIs.
Correct, yes. Of course, there are lots of risks which we didn't discuss today, like rate of return risk, displaced commercial risk. Also, it's only happened to the Islamic banks. If we will cover each type of risk, it will cover maybe 3 hours for each type of risk, because it's have many application, many explanation. Of course. Okay.
all right.
Thank you very much also for your attendance.
Yeah.
And
yes, doctor, do you want to maybe discuss? I will share the page here. Can you give us your 55 minutes more, please, if you don't mind?
yes, please.
Okay. So maybe I can share, and then you can talk about the enrollment side of the course, like how many lecture classes, dates.
Yes. Okay, so this is basically, it will be around 8 classes, inshallah, language in English. It will cover the basic risk management concepts and application in Islamic financial institutions. Okay, can you go down, please? The total learning hour, it will be around 16 hours. Okay, yes. Okay, also this course will teach you about the theoretical and practical application of Islamic financial risk assessment and mitigation. It will cover different topics in managing the risks, starting from what we discussed today. It was an introduction about this topic. Okay. So basically, if you can, Brother Fahd, go to the syllabus. So the syllabus, it will cover around eight classes, okay? So in each week, we will discuss one particular topic. So first of all, the first week, it will cover the general principles, basic concept and technique, and risk management processes, and different types of risks. We will discuss it in details, inshallah. And then we will discuss the concept of risk from Islamic perspective. What do we mean by the Islamic perspective on risk management, the concept of risk in Islam. Also, we will discuss the capital requirements for Islamic financial institutions. We will go in details into the qualitative and quantitative analysis of risk. Also, we will discuss in week 3 the introduction of risk in Islamic finance, how the concept and basis of risk premium is in Islamic financial institution work. And of course, it's very important to understand the IFSB and IOFI guidelines on risk management. Also, we will discuss about the Sharia non-compliance risk and how the way to edit or to manage those risks by using Sharia auditing and Sharia review. In week number 5, inshallah, we will cover the market risk management. And here, the brother, he asked about the rate of return or equity investment risk. We will cover in details. And of course, those are related to displaced commercial risk. And then we will cover about credit risk management. What is credit rating? What is the way they manage the credit risk for different Islamic financial institutions, and the expected and unexpected loss, also the credit risk implications. Okay. Lastly, I think we have the risk mitigation instruments. What are the most important or most mitigation instruments used in Islamic finance? And lastly, we will have general revision of the course. It will cover the whole 7 or 8 weeks. So this is basically the syllabus of the course. Okay. If you have any questions. Brother Fahad, is it clear, or do you have any questions, or do you?
Is there any question from the attendees if they want to ask any questions from doctor with regards to the detailing of the course, what would be covered, or how it's going to be? So doctor is here, we can answer. Perhaps you can contact Taif as well in any case if you want to.
Hassan, can you maybe open everybody mic?
Sure.
Sheikh, doctor, I have one question about the final projects, and maybe you can put some light on how this course can help you to become a better Islamic banker, or if you are looking into the career opportunities, how this course can help everyone here.
Yeah, actually, the first question you asked about the final project, of course, one of the requirements of this project is, or of this course, for each student or each one he will enroll in this course, he will write a project paper related to topics of risk management. It will help him a lot in understanding the Sharia issues in risk management. And of course, this will give him a theoretical and practical experience in terms of risk management in Islamic financial institutions. In addition, we will have a presentation of the project paper and final exam, inshallah, later at the end of the syllabus. Yes. So as you, Brother Ihsan, mentioned, if someone also have questions, they can ask you, refer to you, and then we will answer their questions, inshallah.
Yes, sure. I've got question that this certificate will be issued by TAIF. Yes, TAIF is a FAA, an IFE accredited institution. Certificate will be inshallah issued by TAIF. And
thank you very much.
Dr. Musa Bera also asked this question. So yeah, thank you very much, doctor. I don't think so there's any question. But if there's any question, please drop us email at contact@taif.ae. TAIF team will be available for next 10 minutes for anyone who have question about enrollment issue. But we would like to thank Dr. Tawfiq Azhar for his time. And inshallah, we are looking forward for this course, which will start on 26 January, Saturday, 26 January. Jazakallah, Sheikh. You can drop, and then rest of the participant can remain. If they have any question, they can ask team time. Thank you very much, Doctor.
Thank you very much. Assalamu alaikum.
So we are available because one of the brothers said that he is having some difficulty in enrolling. I shared the page link. You can go there, and then you can simply select. You can see the details of the course, and then you can also go and purchase the course, inshallah.
Brian, do you want to ask any question? We can hear you. Sure, he's not aware of it. So yes, Fahad, we are here, and then anybody, you can ask anything about the certificate, about the course, about the how long will be the course. It's over 8 weeks. Number of class duration could be two hours or more, depending on the details what doctor would provide. And then further, we will have quizzes every class. And the benefit of this is basically having a journal revision for all the course at the end of the session. In case if somebody missed a class, they can always view their classes. We'll have a separate portal for it. It's not just on the Zoom. So be giving a login ID for TIFE platform. You'll be able to go and log into TIFE platform. You will have access to different reading materials. You will be able to see other instructors and other people, what are they doing and what courses are they having. So whoever is registering will have a discount for other courses as well. So it's the time of the year, at the end of the year, and then everybody is trying to excel themselves in different ways. And we all are coming towards digitalization, and TIFE is bringing Islamic finance to a different level. There are some courses available on different platforms. However, the way TIFE is conducted is completely different, and you will experience it while you will enjoy the live classes. We'll have different modules. Live classes will have self-paced classes, okay, and instructor-lead classes. These classes, instructor-lead classes, the instructor will be there with you. You can ask questions, interact anytime. Perhaps there will be discussion sessions as well during the in between the students of the class. So
Sorry for the interruption, brother.
Mr.
What would be the timing of the classes and course fee?
Courses climbing of the classes will be 2
Yes,
hours.
maybe I can answer.
Sure.
Maybe I can answer this, Manasa. So the classes will be of 2 hours, including 30 minutes Q&A and a quiz, and it will be done on the TIFE platform. It will be like sort of Zoom. It will be Zoom, but you will be interactive with the platform where you will be guided, and you can use your cell phone and everything to access those classes and do the QA. And the timing, the enrollment is 30 seats. So after 30 seats, we will be closing the classes. So we have very limited time to enroll, inshallah. And once enrollment is done, we will connect with everyone and inshallah see on 23rd January, the class will inshallah start. About the time slot, doctor asked us to actually contact all the students who have enrolled and see what is the best time feasible for them. And inshallah, that time we will start the class. For the student, for example, because they will have unlimited access to the platform, even if they cannot somehow not join the live class, they can always have access to the secured recording, and they can also contact doctor using the platform, and things will be very systematically.
Jazakallah, brother Fahad. Jazakallah.
Why? Anybody has any question, they can inshallah ask. They just have to unmute their mic and then inshallah ask question.
There are questions. There are several questions in the Q&A as well. So definitely we'll post those questions on social media answers, and inshallah we'll tag you and email you as well separately. So no problem. That's not a problem, inshallah. Okay, Fahad, I think we should wrap up the session.
Yes, please, inshallah.
Inshallah. Thank you very much, everyone, for joining. Jazakallah. And then hope you'll be able to grab this opportunity and get in touch with life and enjoy the digital learning in a different way. Assalamu alaikum wa rahmatullahi wa barakatuh.